Hello and welcome to Idea to IPO. I'm Jason Putnam-Gordon, an emerging growth and venture capital attorney with K&L Gates LLP, which is a full-service global law firm with roughly 2,000 attorneys on 5 different continents and with 50 different offices approximately. We work with venture-backed companies from formation through exits, and we work with investors in formation of their funds and deployment of their capital. We've got a fantastic panel today that's focused on investment and innovations in energy and climate tech. Our panelists with us today are Gabe Cuadra, who's a senior associate at Powerhouse Ventures, Sanjit Singh Dang, who's the chairman and co-founder of You First Capital. And then we may actually have a third panelist showing up, but it is year end. Everyone's really busy, so we'll keep you in suspense as we sort through that. I'm going to let each of the panelists introduce themselves in a moment, but first I want to just provide you with some background information. So not only am I moderating today, but I'm also running the tech in the background. So if I look away or seem like I'm working on something else, it's not because the panelists are saying something uninteresting. It's because I'm probably working on something to make sure that you have a smooth and enjoyable experience. If you're joining us late or you missed today, no problem. Today's event is being recorded. So long as you've given your email address when you've registered, we'll be able to follow up with you and send you a copy of the recording within roughly a week. We've got a poll that is running in the background, so please take a moment to complete that poll. We'd appreciate knowing who's in the audience. It helps us tailor our comments for who's here. Now, with that, maybe we'll kick it off by allowing Sanjit to tell you a little bit about himself, about You First Capital, where they play and what's life cycle stage and what particular vertical, especially even within the subvertical of energy and climate. Sanjit, great to have you back.
Thank you. Thank you very much, Jason. And thank you so much, Rob, for having me here. Really appreciate. And, energy and climate have been the hot topics, I would say, in 2023, right next to AI, in my humble opinion. So thank you. My name is Sanjit. And as Jason mentioned, I'm the co-founder and chairman of You First Capital. We're based in Silicon Valley, and it's run by 2 founders, me and Ekta, who comes from Intel Capital background. And we have driven investments under You First Capital in 23 companies now, 23 companies across stages. But we would like to do early stage investments, and we prefer to invest in founders that have a unique viewpoint of the market. Our goal is to leverage AI and data analytics for different verticals, climate and energy being the prime among those. And out of the investments we have made, 23 investments, 5 have exited in the last, this is in the last 3.5 years. And we are looking at hopefully another exit soon. So I'll pause here and happy to give more information about the firm or about my background.
Fantastic. Well, I tell you what, so You First Capital is kind of unique among sort of venture funds, right? You tell the audience a little bit about what makes you special in terms of your relationships on your, in terms of who your LPs are.
Yeah, no, absolutely. So You First Capital works with corporations. We have a model, we call it venture capital as a service for corporations. And under that, we help corporations to do venture capital investments and also how they can work with startups. So this is one part of You First Capital. Second is the investments that I talked about. And under those, we have made all those investments. LPs vary from corporation side to family offices and a couple of institutional investors as well.
Fantastic. Well, we're delighted to have you on the panel today. Gabe, can you tell the audience a little bit about yourself and Powerhouse Ventures and the sort of space in which you play?
Yeah, thanks, Jason. Really excited to be here today. So Powerhouse Ventures invests in early stage software that is decarbonizing energy and mobility. But we take a pretty broad view of what's encompassed in energy and mobility. I think the easiest way to sum it up is it's anything that is climate tech that isn't directly food and ag. But because energy and mobility touches really the rest of what we do, it kind of falls within scope. We generally invest at the pre-seed and seed level is where we focus. We are part of a two-sided organization. And so while we take a much more narrow view and just focus on the early stage software side, we have colleagues on our Powerhouse Innovation Consulting firm that work with large corporates to help them interface with the climate tech community more broadly. So they track startups in both hardware and software across stage and help large clients find the partners they need for commercial endeavors or for investments or acquisitions. I see the question on where everyone is from. So Powerhouse Ventures is located and headquartered in Oakland, but we have a bit of a remote team. So I'm actually calling in today and based in Houston, Texas. Prior to joining Powerhouse Ventures, I worked in the utility space supporting electric and gas utilities on everything on the demand side. So you can think of that as energy efficiency, demand response, electrification, both for buildings and vehicles. And so I tell people I learned the industry from the customer up instead of the power plant down. And I think that provides a little bit of a different market view than we often see. So excited for today's panel. Thank you again for having me on.
Terrific. We're delighted to have you here. And kudos for monitoring the chat. I guess the chat is for the audience to be able to communicate amongst themselves. We encourage you to use it respectfully. I will not be moderating the chat because of just task saturation. It's like too many things, but I will be monitoring the Q&A function. So if you've got questions, please submit them. We'll answer them. We're going to spend about 55 minutes or so having a conversation amongst the panel, and then we'll pivot to a Q&A session. So please get your questions in via the Q&A function. We'll work to address those questions sort of with the most general applicability, kind of the most narrow, that we hopefully touch on cover the most in the time that we have together. I'm going to take one more second to just sort of ask that if you're here in the room with us today, please fill out the poll, because I'm going to display the results and share them with the rest of the audience right now. So count down like 10 more seconds. I'll take a drink of water. All right, you'll have to forever hold your peace at this point. So we've got roughly a quarter of the attendees from the Bay Area and another 30% from the US, 10% from North America, 16% from Europe. So thank you for staying awake and being with us. And 2% from Asia, 6% from Africa, some folks from Australia. So it's probably pretty early in the morning for you. And then a few folks from somewhere else. And then in terms of who's in the room, 30% are first-time entrepreneurs, 15% are serial entrepreneurs, some folks in early stage companies, some venture investors, some in academia, some folks in the media, and then a sort of miscellaneous category of roughly 20%. So those are the folks who are here live. We usually find, actually, because this is recorded and available afterwards, that we probably have 2 or 3 times the number of people watch this on a recording. So thank you for watching this on a recording if you're doing that. We'll try and be entertaining, but we won't try too hard and make ourselves unentertaining. So Sanjit, I think you indicated there's a particular sort of bright spot next to AI. I mean, tell us, I think it's always interesting to check in. So we've now basically gotten through 2023, right? There's sort of, I think we were saying less than 10 business days, probably less left in the year at this point. Well, maybe around 10 business days, let's say. Can you tell us a little bit about what you've seen maybe in the venture market generally and sort of the bright spots that you mentioned before? And love to have a conversation between you and Gabe to hear kind of where the state of the union has been and kind of what you're seeing for 2024.
No, absolutely. So, from a climate tech and energy standpoint, like I mentioned, the interesting thing for us is to see how we can leverage new technologies like AI to drive impact there. And if you step back and look at the problem statement, right, we are I would say almost in a carbon dioxide tsunami, and that is quite real and something that I think we as human race did not account for as urbanization happened or as even other trends happened. And, if you look at how long will it take to add the next 1 billion people on Earth, maybe around 10, 12 years, something like that. The population is expected to cross 10 billion by 2050. And you start thinking about the impact in terms of emissions, in terms of the usage. And keep in mind, there is what is if I have to ask in the poll, if I have to ask the audience, what is the total weight of all the human beings on Earth today? If you have to take a rough guess, it's roughly half a gigaton. And as you start adding more human beings, number one, there's a weight impact. Then keep in mind, 10 billion people will also consume all the utilities, electricity, heating, cooling, transportation, food, steel, textile, water, cement, everything. And we are going to start to see a huge impact in terms of emissions, in terms of especially carbon dioxide through these. Now, the good thing is that the world has made progress towards electric vehicles, but the back end is still fossil fuel for electric vehicles for charging. Renewable electricity is still is happening, but not at quite the pace where it's needed to be. So I think those problems at a mega trends level remain, and I think we're going to see a long duration grid scale shortage, I feel. So there needs to be actually an acceleration toward conversion to more renewable sources compared to the pace we are on today. And if you look at it, how can technology help? We can help with creating these new batteries. There are companies that we are looking at that are creating much faster charging times, for example. That's one way to do it from a startup and venture capital standpoint. Second is to start predicting. I think our predictive analytics have been a little, I would say, on the poor side in terms of climate tech and energy, and we get caught. You start looking at the agreements and what the recent conferences that have happened, especially last week in Dubai. I still feel those are good steps, but I think we are in a catch-up mode. Because if we are still fighting to understand every 2 degrees Celsius impact, which is like the barometer for nations to start coming together and, hey, now I have to make changes, and which is not easy to do at a country level for any country. So I think there needs to be a better predictability at a consumer level. That's where analytics can help. That's where AI can help. I like that certain airlines have started talking about, you go to United and start booking. They talk about, hey, they talk about emissions impact. That's good awareness. I'm not sure if consumers are actually making their flight decisions based on that, but that's good awareness. Similarly, as banks, when they give out loans, mortgage loans, they should be talking about, hey, what is the energy impact of this particular home based on the design and the usage of different materials, steel versus concrete, etc. So I think we need to get into an era where we can predict, if I do this, what is the impact at a unit level? And if we as consumers start thinking like that, then the change will happen at a national level instead of waiting for the leaders to go drive the change top down.
Gabe, yeah, what do you think, Gabe?
Yeah, obviously I agree with Sanjit that we are in catch-up mode, and needing to accelerate, our deployment of really innovative solutions. I think to touch on a couple of the themes that I heard from Sanjit, there is a disconnect between, I think, even consumer intentions and the data that is out there. And one of the risks that we talk a lot about and see is the difference between what moves the needle and what corporations are doing, and intentionally or unintentionally, that is more of a greenwashing kind of perspective. And so, to the idea that data is going to have a really important role in this, I think the more we can do to help folks understand and be able to differentiate between the carbon footprint of different products, can we have really robust, scalable life cycle analysis to where when I go and buy a product, I can see what the carbon footprint of that product is compared to a similar product. Today, with the solutions that are in the market, I'm making a generic guess based on what that product is, but I can't compare 2 pieces of produce at the grocery store and understand kind of their relative carbon footprints. I think there's an opportunity, to Sanjit's point, of empowering consumers by providing them those kind of insights. And it's a place where there's still a lot of room for innovation to happen on that data side. I also want to double click on the piece he said on optimization. I think that's, we focus on software because we believe that there is really great hardware out there today that needs to be deployed in a more optimized way. And so to highlight one of our portfolio companies, we have a company we invested last year called Taiba, which is doing that for grid scale batteries. Those batteries are just more complex to operate in an optimized way than traditional power plants, where you had your fuel source dynamically just sitting there at your coal plant for when you needed it. On a battery, you need to be able to charge and discharge at the optimal time with uncertainty. And I think folks like Taiba that are working to solve that problem are going to help us really make the most of the investments that we're making and allow folks to get both the climate impact that we're looking for out of those investments as well as the financial rewards.
Yeah, I mean, one sort of, and I don't know if you'll have any thoughts or comments on this. I mean, one of the things I sort of think about, as we move from sort of a mechanical world to a more digital world is just, a lot of the mechanical solutions, or sort of in this case, sort of fossil fuel solutions, have had like 100 years to sort of evolve and kind of get more and more efficient. But it seems sort of on the digital side, there's a bit of a curve, but it's able to sort of catch up, I think, faster. It's going to take us to 100 years to get better at, battery optimization, right? These are things that can get done within a venture timescale, more or less, right? In venture investment timescale.
Yeah, I
think
it is important. Go ahead, Gabe.
I 100% agree that software can move quickly, and I would add on to that there are just mechanical changes that are having to happen in our society that are facing those growing pains right now, and we should be thinking about the ways that software and advances like AI can help solve them. I think one that's really obvious to me right now, based on some recent news that's come out, is around maintaining electric vehicles. I think Austin came out with an article in their local newspaper about the city struggling with maintaining their electric buses. That is a place where we have to come up the learning curve much more quickly than we had to for ICE-based vehicles because of the adoption we need. And software can help us move up the learning curve for maintaining those mechanical systems.
And I think, I think I echo that as well, what Gabe said. And I think I would add to it that we need, from a venture scale timing standpoint, as well as from an impact standpoint, I think we need a whole dedicated focus from LPs. LPs are limited partners who invest in venture capital funds. I think there needs to be almost a mandate to drive capital, to drive VCs to put money into some of these deals, some of these areas. Sorry. So which I think is happening to some extent, and there is a big focus on climate and sustainability, but it is still not up there, I feel, from an LP standpoint.
Is that? Oh, go ahead. No, go ahead. Go ahead,
yeah,
Gabe.
and to that point, I think we're seeing a slowdown in deployment, even in climate tech in 2023 compared to 2021 and 2022. And so on the one hand, I think we're in agreement that this needs to be a time of acceleration in deploying our carbon solution, our climate tech solutions. At the same time, just given some of the market dynamics and uncertainties, especially in the first half of 2023, and I think to a certain extent in the second half as well, we've seen a pullback on deployment. And I think to Sanjit's point, the more that LPs are pushing us to deploy and being willing to take on the solutions that folks are investing in, that can start to drive the needle for more investment in our space.
I mean, what have you seen, or what have each of you seen, maybe, especially with respect to the climate space and energy spaces, in terms of, why the slowdown, or what are some of the factors you think sort of involved in that in 2023? Because as we entered 2023, we have more dry powder sort of ready for deployment than I think maybe any time historically. I think 2021 might have been the record year, and 2022 might have been the second record year in terms of raising capital. But I'm curious as to what are the factors you've seen that have impacted and slowed down investment, and then do you see them resolving?
I think you At a joking level, I would blame GPT for that.
Yeah, sorry, I was on mute. Yeah.
I would blame GPT. GPT came out in November, and I'm talking in a good way. I love GPT, guys. Don't get me wrong. But I think the challenge for investors going into 2023 was there's a lot of dry powder, and then that GPT came out in November last year, and since then their focus were like, oh, how do I focus on AI? How do I drive a strategy in AI? And I think while climate tech should be up there, and it was up there in 2023 in terms of discussions and talk, but I think may not have been up there in terms of capital deployment. So I think there is VCs, I would say, got drifted more towards AI, which I think is still a pervasive technology, and it's a horizontal platform that can be applied towards climate tech as well, and that's been our focus as well.
It's like
But I hope
LLMs.
yeah, LLMs for climate tech, LLMs who can build predictive analytics using GPT models.
It was almost like the LLMs. So for you, it's almost as if the GPT or LLM sort of stole the thunder. I mean, we had the Inflation Reduction Act, I think, in August of 2022, and there was kind of a big boost, I think, initially, maybe, and a lot of enthusiasm, and maybe it didn't sort of follow through, or hasn't yet been completed at this point.
Yeah, and I hope we can dig in a little more deeply to the opportunities for AI and climate tech here in a second. But if I will jokingly blame the New York Times for the slowdown. I think they came out with an article in like January or February of this year about how climate tech was insulated from the broader slowdown in VC, and almost immediately after that, things really slowed down. So jokingly, we'll blame them. I think more realistically, though, climate tech investments tend to be long-term investments. And so there is an interest rate impact that comes along with that. And we are also, as financial investors, looking for exits. And as IPO and acquisition markets slowed, there just was a trickle down impact to that we were not fully insulated from. And so what we saw was a lot of folks, as that market uncertainty set in, taking a bit of a wait and see. We saw a lot of portfolio companies or other companies kind of raising insider rounds to extend and wait and see and how the market would develop. I think there were some great founders who maybe bootstrapped longer than they initially planned, and are now coming to market now that there's a little bit more clarity on how things might be in the future, and kind of gave the market some time to feel things out. So I'm hopeful that there's been some acceleration on the back half of this year, and that will continue into 2024. I think we could even see maybe a rush on the climate tech side to get funding secured ahead of the election, just because of the uncertainty that adds as we get closer to that. So I think we'll see a bump in early 2024 would be my hunch. But for, I think, those broad ecosystem reasons that have slowed venture broadly definitely do have an impact on us as well.
But I want to just so I think we absolutely should circle back and touch about AI and climate tech in a moment. But in terms of thinking about the sort of broad macroeconomic factors, I mean, do you see sort of the Fed's announcement yesterday that they weren't going to raise rates, at least currently, and maybe foresee a few cuts in over the next year as being helpful for venture and climate tech in particular? Or do you think they'll be have minimal impact?
I think the rates are already quite high, and that's hurting the flow of credit. I understand the reasons why the Fed had to raise the rate, but on the other side, it is hurting the flow of credit, and that is probably going to hurt some of the climate tech efforts as well. So while Fed is not raising, but at some point, I think they should look at reducing the rate.
And on credit, I'm sorry, were you going to say something, Gabe? No, I was going to say on credit. I mean, in March, obviously there was a banking crisis, especially with respect to Silicon Valley Bank, and sort of a dry up in the access to venture debt. I don't know if that's impacted. I'd be curious to hear your take on, whether that's impacted the space, whether that's impacted sort of any of your portfolio companies, does that also seem to have maybe taken some capital out of the system, as well as injected a lot of uncertainty and a lot of mind share capture, as each of these companies, and then, the investors also had to sort of grapple in real time with the sort of the crisis.
I think that crisis definitely affected startups in general, and it affected the liquidity situation, how much time horizon a startup had for raising the next round, and some of that has been pulled in because of lack of venture debt. Venture debt was always looked at as a sweetener on top of your last round and extend your runway by another 6 to 12 months, maybe sometimes 18 months. And that was very helpful for startups. And it was non-dilutive. Those solutions still exist, but not at the same scale anymore. And they're also harder to get, especially for earlier stage companies that are pre-revenue or have insignificant revenue. So yes, there has been an impact.
So a reduction in runway at the time that you sort of maybe need it the most, right? In terms of the environment not being a particularly great time to be sort of raising, not super frothy.
And I think to your point on just the mind space, it was one piece in what's felt like this constant split screen this year of either we're in this great economy or we're in this, terrible sky is falling economy, depending on which metrics you're focused on and who you're talking to at any given time. And I think that was one big piece of this, constant back and forth of, is this really a good economy? And is this a place where folks are ready to jump in and deploy capital? Or should we be buckling down the hatches because there's turbulence ahead? And I think it's been really hard to get clarity on that. And I think uncertainty is difficult for our space.
So each of you is focused in part on software, and it sounds like each of you also has a particular interest in thinking that artificial intelligence and machine learning have great applications in the climate and energy space. I'd love to hear sort of what you're seeing in the market, and maybe if you think there are some opportunities that are out there as well. I'd like to get your thoughts on that. It's an open question.
Happy to let you go first, Sanjit, if you'd like.
Yeah, no, I absolutely. I think, in the broader market, we are seeing a lot of investors getting back into the market. I want to also clarify this point about dry powder. Yes, going into 2023, there was a lot of dry powder, but I think VCs also wanted to save the dry powder for portfolio companies instead of only for new rounds, new investments, right? So there has been a whole shift of how much capital do I allocate for new investments versus supporting my portfolio company. So that has been a big trend. And I expect that trend will continue because some of the portfolio companies are probably having a hard time raising next round.
Yeah, I mean, in my sort of anecdotal experience, it sort of seems like the companies that have sort of the best sort of fundamentals right now are still, it is sort of a tale of two startups. I think, if you've got good fundamentals and you look strong and you don't need to raise, now's a great time to be raising because everyone wants to throw, you'll have the opportunity to strike still pretty good deal terms. But if it's a little bit more of a swing, I think, folks are guarded against taking those big swings at the moment.
Yeah, our experience has largely aligned with yours, Jason, so that resonates. Can you repeat your last question? I think I may have missed it on the side.
Oh, so I was interested in hearing kind of what your observation of opportunities in the market for AI and machine learning and sort of where you're seeing interesting developments and how they're sort of playing out both, if you see LLM, large language models being, used and deployed, that's great. But other, AI and machine learning technologies too, I think are very interesting.
Yeah, I think the way that we think about it is one important distinction. I think AI gets used and is an umbrella term for lots of different types of tech. So I'm glad you mentioned large language models being separate than other types of machine learning. And we definitely believe that's the case. We've been investing in startups using machine learning for various applications for a long time. And we continue to see there being opportunities to use machine learning on assets that have lots of data that can be leveraged for them to run in a more optimized way, to be maintained in a better way. I think there are continued ideas there. We were having the conversation earlier about the relationship between software and hardware in climate tech. And ultimately, software has to enable great hardware. And so to the extent that we can use machine learning to better optimize assets, hard tech assets that are in the field, and allow them to really get the best benefits, both financially and in terms of carbon possible. I think that's a very important role for kind of traditional AI to be playing. When we look at large language models and kind of this post-Chat GPT or GPT-4 world, where we see some really great opportunities, is in taking large sets of unstructured data and making them more accessible to folks who need to be using them. And so that can be on the operations and maintenance side. How can you have a technician go out into the field and have a really clear set of a checklist of how to review that asset based on that asset's history, based on experiences with like assets? Can you point it directly to the point in the manual, for example, if one exists that they should be referring to based on the symptoms that have been put in? So I think there are a lot of opportunities there. I think there are also opportunities in democratizing the access to incentives, to grants, to regulatory information that are today, buried in pretty dense, sometimes convoluted documentation. And can we use LLMs to really make it easier for individuals, companies, and others to access and use that information without having to hire the manpower to kind of, and the expertise to go through that? Where we see maybe some of the limits around generative AI is in our space. We think it has to be able to point back to its sources. It has to be explainable is the way we talk about it. Because of the types of decisions folks in our space are making, they need to be able to refer back to that original source. And so anything that's kind of black box, we tend to shy away from. I also am skeptical about its use on critical assets in the near term, just until the tech is a bit more proven out. But when you think about something like the grid or like a major power plant that you can't afford to have trip offline unexpectedly, we don't see those players taking on a lot of tech risk with something like generative AI in the short term.
I want to add and hopefully address the question from Bert Wang. GPT looks at history. Innovation is future with no history. What am I missing? That's his question. Obviously, any model will first look at history, but I think there are trends and current data trends that the model can incorporate to predict the future landmark changes that will affect, in this case, climate. But I would not dismiss some of these models as, hey, these are looking at only history. So just wanted to clarify that. And I think we are going to start seeing, as a step one, we are going to start seeing apps that will do better weather predictions than the systems that we have today. I know startups that are already looking at, hey, can I predict earthquakes minutes in advance? Right. And there are actually some techniques you can do. I was as a fun conversation, I was ideating with a neighbor of mine. I live in Fremont, and when we get an earthquake, the epicenter is always Calaveras Falls, a few miles away. I was like, we should put a chandelier over there. When it moves, send me a signal, send me a message, motion sensor. So you can do very basic things just to start getting data, even if it is a few seconds in advance. Right, but that's what I'm talking about is very basic. I think using analytics, using a GPT style model, you can actually start feeding in multimodal data into the model and hence start predicting earthquakes, tsunamis. Are there, when the earth is moving, is there temperature change happening? Can we get that sensor data real time? So there is a lot that can be done. I think the good thing is these models are becoming more and more powerful as they're getting trained, not just by text input, but by data from multiple modalities. But I think we are going to see a lot better predictive solutions than what we have today.
So because, I mean, and it kind of zooming out, so like in principle, just because you can ingest and process, additional data, in orders of magnitude greater than what was, other models can do, is you think that you'll be able to start being able to get predictive tools and models coming out of artificial intelligence. Is that kind of,
I think so. Yeah, I think so. And I think when look at GPT-4, how many parameters it's already trained on.
Mm-hmm.
Right. So once you start creating models at that scale, this didn't exist earlier. Then you can start creating predictive analytics. I totally believe that's going to happen, not just for climate tech, but for other use cases too. And that's where the power of these models lies, I feel. Give me an answer, give me this chat interface is awesome. We all love it. But what's the 10x level now?
And are you starting to see entrepreneurs starting to see those opportunities? Yeah,
absolutely. Absolutely. I think you're going to see the next era where models from whether it is OpenAI, Anthropic, or other companies, and Llama 2 from Meta, and other open source models, right? We're going to start to see applications being built on top. This is like the iPhone moment, where Apple provided the base platform and then apps, just skyrocketed.
I mean, I'd still just remember, getting my iPhone and being like, oh my gosh, we can do this and this and this and this and this with it, right? And then
going from BlackBerry.
That's right. Although I could no longer play. I used to always play Brick Breaker on my BlackBerry with the little ball thing. That was, I don't know. Some things you have to give up.
Yeah.
Jason, if I can actually jump in with a question for Sanjit.
Oh, yeah.
I'm curious, as you're seeing more stuff being built on top of models like Llama or GPT-4, how do you think about defensibility and a moat for those kinds of solutions?
It's a very good question and an astute question, actually. Over the years, this is pre-GPT era. Over the years, I used to think data trumps algorithms. And I would tell startups, okay, you might have a better algorithm today, but 2 years from now, somebody will come up with a better algorithm. And at that time, data becomes your moat. The paradigm, I think, has shifted a little bit over time, because now the scale of these models, the scale of data on which these models are trained, is at a whole different level. So if you look at how long does it take to create an LLM, it probably takes 1 to 2 years to create the first rev of an LLM. And how much does it cost? At least $1 billion, at least, likely more, because of the compute cost, NVIDIA GPUs, etc., etc. So now the model itself, the algorithms themselves, are becoming the moat. Then data becomes the second element of defensibility equation. So I think it's becoming very hard. That's why I think in this is digressing from the climate tech topic, but I think in the whole LLM space, you're going to see three big winners. Beyond that, it's going to be a long tail of small companies with very niche focused models for some use cases, but they're not going to be able to compete with the top two, maybe not even three, top two. It's just too capital intensive. Think of it like the analogy is if you have to create fabs, semiconductor fabs, each fab costs $10 billion and you have to start like 5 years in advance before you get any dollar in revenue. How many companies can do that? This is not a regular startup market. And when I say market, I'm talking of the LLM market.
Cool.
That's a great question. Thanks for asking it, Gabe. I guess, do you have any thoughts in response, or I was going to maybe shift the conversation a little bit?
Yeah, no, it's something that we're thinking about a lot, and so that's why I was curious to get Sanjit's perspective. I think something we're also looking at is, okay, if you're using one of the more open sources and keeping your compute costs lower by doing that, and having those more niche applications, how might that look in a climate standpoint? Where I think we do have some more niche applications that can still be very good outcomes for startups. So that's something that we're continuing to think about.
And for the audience, especially the first-time entrepreneurs, I think, you know, whether you know it or not, this is actually a really interesting and important sort of topic that we just covered, because I think it hopefully shows a little bit about how venture capitalists think about risks and the various kinds of risks, and how they can start to, you know, at the end of the day, they've got a business to run, which is to take money from their investors and deploy it into their portfolio companies and get a return on it. And, you know, how is it that they're going to end up deploying funds into a home run company, right? What does the market look like? And those funds are going to get deployed. So if you've watched this on a recording, go back and watch it again. And you can pick up some insights maybe as to both this specific topic, and then you can kind of apply it maybe more generally to an analytical framework that you can see these folks deploy.
And this is if I may add.
Yo, please. Yeah.
Yeah, this is something that I see. I think some entrepreneurs understand what venture capital invests in, some don't. And there's actually a narrow box in which venture capital operates in. It cannot solve all the world's problems, hunger, climate, everything. There are different sources of capital for those problems as well, but venture capital can fund product companies. Number one, we focus on product companies, not services companies. Number two, we have to drive returns, to Jason's point, because funds have a particular life cycle, typically 5 to 10 years. So we have to make sure the companies can grow within that time frame, grow substantially within that time frame, and drive a 30 to 40x, maybe 100x return, at least the goal. Not every company delivers it, we understand it, but at least there should be a path for you to be able to deliver that.
Thank you. I think that's right. So I guess for those folks who are, you know, watching and who maybe are interested in getting involved in the space, what opportunities are you seeing? I mean, is there still growth by and large? You know, is this sort of the demand for talent exceed the talent, or is there more talent right now in the climate and energy space than, you know, can be sort of utilized?
I am seeing more awareness from newer startups, and they are looking at, hey, how do I drive impact versus purely just financial gain? And that's great. This is like a double parallel path that a lot of entrepreneurs are thinking about. Especially, I'm very hopeful. Actually, I see this as a trend in the mindset of college students. So they question, hey, you're driving returns, financial returns, but where is the impact as well? So I think that's a great kind of thinking. I also see hope. I'm hopeful. I don't see yet, but I'm hopeful that the dollars to support those entrepreneurs also go up in 2024. There are funds. DBL Partners is one of them. We know them pretty well. They invest in those double bottom line. That's the name of the fund, actually. So we are seeing good changes. I'm hopeful for a greater slope of change, though, in 2024.
Yeah, and to Sanjit's point at the very beginning of the call, we're in catch-up mode as a society, and so, you know, I don't think you can have too many folks working on climate tech problems right now. I think my challenge to folks who are saying, you know, I've had a different career and I'm ready to pivot into climate, is to understand what unique kind of characteristics or skill sets or assets can you bring to the problem. and to partner with folks who are bringing sector expertise. We're much more excited about teams that bring someone with deep sector expertise and someone with outside expertise and are matching those together in a unique, powerful way, compared to someone who has just done something in real estate or something separate from climate, and thinks that they can just take that playbook and apply it to the energy side or the mobility side, without having a counterpart on the team who's bringing that kind of past sector expertise. So my challenge would be, understand what you bring and partner with someone who fills in your gaps.
And maybe shifting a little bit, focusing a little bit more on the energy side. What sort of developments are you seeing in the energy space as we shift to sort of green and renewables? We've made some allusions to the UN Climate Summit, which even yesterday, I think came out with a resolution indicating the transition away from fossil fuels. Tripled the amount of renewables that are being used within, I think by 2030, or triple the amount of renewables, cutting methane, which is I guess by volume less of it is being emitted, but sort of by impact it is even worse than carbon dioxide. What are you seeing on the energy side?
I go ahead, Gabe.
Yeah, I think these goals are really important around deploying additional renewables, and I would add on to that and decarbonizing, hard to decarbonize sectors like sustainable air fuel, like industrial processes. We can't lose sight of the just functional challenges that come along with doing that. That just, this isn't something we're going to wish into existence. It means we have to continue to innovate in order to make those a reality. And so when we just look at expanding the amount of renewable energy on our grid in the United States, that's going to include continuing to improve the way we do interconnection. I think that's a topic that's been talked about a lot, but I don't think can be talked about enough. That we're not going to reach our goals without transmission and interconnection reform. That includes figuring out ways to build electrolyzers that can match the ups and downs of renewable energy, which has been some news just recently that's easier said than done. And I think sometimes we set these goals and forget about the real challenges that come with putting them into practice.
I mean, certainly being out here in California in terms of the infrastructure, right? So everybody tons of electric cars, tons of heat pumps, which are great, but our grid, is an old grid and it needs some TLC as well, I think.
And not to pick on California, but we need to do it affordably as well. No one in PG&E territory is looking to have their rates double to fund some of this transition. So it's just another reason that we need really thoughtful innovation happening so that we can bring on these additional technologies, integrate them, and do so not only rapidly, but affordably and reliably.
I'm hopeful that I think technologies around EVs will continue to get funded. We talked about batteries, but then there are others also new charging solutions, supercharging level solutions for non-Tesla vehicles. I'm seeing those getting funded. So that's another trend. Then carbon capture and storage is another one. And then I think green hydrogen, of course. So, but the challenge from a venture capital standpoint, at least for us, is these have to drive progress and return within the time frame that venture capital needs. And we discussed that in detail already, so we don't need to go over it again. But there is a difference between a social impact, very good project that may or may not involve a new technology, versus focusing on a new technology or a new chemistry for battery, etc., that can actually drive change, but also drive returns within a 5-year time frame.
I mean, do you feel like, I think there was some hope when the Inflation Reduction Act came out in August of 2022 that sort of the tax incentives and the grants and other things will help sort of drive investment, in part because you can leverage venture dollars, and to a greater extent than you would otherwise be able to. I mean, have you seen that has been positively impactful in the space, and like, have folks now been able to start to take advantage of that, or is it not, not been as impactful as sort of the level of enthusiasm was 18 months ago?
I think we've seen a delay in actual investments being made as some of the fine print in the rules have been worked out and delayed because they're complicated and impactful decisions. I think hydrogen is a great example of that. When we talk to folks working in the hydrogen space, there's a lot of like, we're in wait and see mode until the regulations are finalized, because until you know the rules of the road, it's hard to design the ideal types of projects to earn those incentives. And so it's coming in, there's always this balance of we absolutely need to get it right and we absolutely need to do it quickly. And those are hard things to do and hard things for the government to do. So I don't mean that as a criticism, but just a reality that, the IRA is incredibly monumental. I don't think we're seeing the full impact yet because of the remaining uncertainty that exists around, the exact rules that will influence those tax credits.
Yeah, I mean, I've heard stories where, to the extent, companies are, having to borrow money because they're anticipating a grant to come in and it hasn't necessarily come in yet. And it's been, that uncertainty is a very difficult thing to create. There's already so much uncertainty sort of when you're working with a venture-backed company and trying to commercialize a technology. It's not particularly helpful. So hopefully that will start to resolve soon. Talking about green hydrogen, I mean, what sort of software, are you seeing, deployments of software or use cases of software that's been impactful and helpful there?
We've seen kind of the first hints at it. I think software tends to come as the technology is de-risked. And I think in many cases for hydrogen, you're still seeing the de-risking of the technology that has to happen first. We've looked at
the hardware, the de-risking of the hardware.
Excuse me.
Yeah.
Right, the hardware. And these same rules of the road. Ultimately, software is going to come along to help people optimize projects. If folks are waiting to do projects because they don't know how the incentives will be structured and what they'll need in order to qualify for these incentives, it makes it very hard for software solutions to support that to get off the ground. I also think it's still an open question of how big of a role green hydrogen actually will play in our decarbonized economy. It's gotten a lot of attention, but hydrogen is a very difficult element to work with. It leaks and has its own GHG impacts when it does. It's explosive. It's not super efficient necessarily to make. And so I also think we need to continue to look at non-hydrogen pathways for decarbonizing industry in applications where that's possible, whether that's using industrial heat pumps, especially as one example of a way that we might see electric solutions instead of hydrogen.
And I think what we are seeing from a software standpoint for green hydrogen is software technologies that can help create end-to-end integrated green hydrogen solutions, and also then work on the important stepping stones for green hydrogen, which are gray and blue hydrogen, and those they allow to help create the necessary frameworks, the infrastructures that are needed to be developed while green hydrogen reaches the necessary scale. And also we feel over time this can remove adoption barriers for zero emission fleet, for example, but you need tech solutions, especially software driven solutions that are managing such fleets and are fully integrated with green hydrogen centric infrastructure. So there's a lot of opportunity there from a software standpoint.
And then maybe on a sort of related note, we haven't touched on this at all, but certainly, some interesting things that I've seen on the sort of either circular economy or sort of, using predictive analytics to sort of generate, more efficient production of consumer goods and consumer, whether it's clothing or food or produce, or, are you seeing any interest or activity in that space, and things that would sort of reduce our carbon footprint, so to speak, and allocate resources more efficiently? Do you see those things as being within sort of climate and energy, or are those, basically, software uses and applications being sort of shoehorned into this vertical?
I think those are one node further away from making a direct impact. And those I think those kinds of paradigm changes will take time and may not even happen at the scale we need them to. So that's my 2 cents.
Yeah, from the venture perspective, from the venture
From
perspective.
a venture standpoint, yeah.
Yeah.
We did make one investment this past year on the waste redistribution side, a company called Copia that takes really hard to donate items and connects them that are otherwise often thrown away, and connects them with nonprofits who are positioned to receive them, starting with hard to donate foods, not necessarily grocery stores, but restaurants, caterers, etc. And I think where we do see the carbon impact there is on a couple fronts. I think there is one of, as you start to get a better sense of how much you're donating or disposing of through using their platform, you can procure less. And I think there's just a reduction aspect that comes with that. And when you look at items, especially like food, but other items as well, that will end up in a landfill, they're emitting methane as they decompose. And that has, kind of global warming impacts or climate change impacts, excuse me. And so, I do think that there's a role for the circular economy plays. Agree with Sanjit's point that scaling them is a challenge, but we've seen some exciting stuff, especially I think on the food side, of people really making an impact and doing well financially as well.
Yeah, I mean, I just remember reading, I think it was 20 years ago or something, that, I was reading an article where basically in the US, 4,000 calories of food is produced per person, per day, right? The average person needs probably fewer than 2,000 calories. And so when you think about that, it's like twice as much. And, and yet we lose so much, a third of the food is just decays, right? You can't distribute it. It doesn't go to the right people. So it just from a, physics perspective, it's an interesting problem and something that, maybe opportunity to solve. Well, so this brings us to the top of the hour. Thank you, panel. What I'd like to do at this point is, maybe if you have any thoughts you'd like to share with the audience, maybe thoughts about, either what to think about if you're a early entrepreneur in the space, or, what you think might happen in 2024. Don't worry, you are recorded, so we can hold it and use it against you, come 2024, come this time next year. But if you would like to share your thoughts, as well as your contact information, if you want to be contacted by anybody who's watching, we'll give you the opportunity to do that. I think, Sanjit, maybe you started this panel, so I'd let Gabe go first, and then we'll transition and we'll take questions from the Q&A function.
Yeah, happy to. My message for entrepreneurs in the audience, and I think it goes back to a comment I made earlier, is as early stage venture capitalists, the first thing we're looking at is the strength of your team. And so I would encourage you to surround yourself with co-founders that you can, walk into a conversation with me or one of my colleagues and explain to us why you are uniquely positioned as a team and complementary as a team in a way that's going to allow you to build a massive company that others aren't going to be able to build. And so, I would start with that team as your North Star, and would really encourage folks to focus on those complementary skill sets.
I think the opportunity for early stage entrepreneurs is humongous, but you have to focus on a few subsectors within energy and climate tech, where you actually can drive impact within, let's say, 2 years, and then grow from there, of course. But I think that product market fit question has to be near term versus 5 to 10 years from now. And the big challenge for entrepreneurs has been to answer the question, why now? We see the mega trends, but if I have to translate the mega trends down to where should I invest, which subsector within climate and energy tech, I cannot create a straight line between the mega trends and the subsector. That's been hard, and entrepreneurs can solve that, can help solve that problem.
Well, fantastic. Well, thank you both. So let's try and take a few questions. So, one question, we raised this earlier, but has in the UN Climate Summit in COP28, have any of those resolutions or agreements kind of impacted your thoughts through the analysis as it comes to, kind of what the future holds? Or, was that already was that expectation that, there would be, the resolution, which I mentioned earlier, kind of baked either explicitly or implicitly sort of baked in, which your theses, have been?
I think the mega alignment at a global level or between nations is kind of expected, despite the differences and conflicts, etc. I think everybody wants the change to happen. So I don't know if it really drives anything new in terms of, hey, now we should do this because there is this resolution. But I think it does bring a heightened sense of urgency, which goes back to my point of, hey, why now? And finding that product market fits sooner meaning within the next 2 years versus in the next 10 years. So it does help accelerate.
Yeah, I would say it was affirming that there's continued global momentum in the right direction. I think we are optimistic and hopeful and invest on the idea that the pace of innovation and decarbonization is going to have to move faster than even what's been agreed upon in some of the COP announcements. And so affirming, glad it didn't completely break down. I think if we would have left without kind of a resolution that people could hang their hat on, that would have been a problem for the sector. But I wouldn't say it's changed the way in which we go about thinking about the startups we'll invest in.
This is actually, well, thank you for answering. I think, I'm just looking at other questions. I mean, this is an interesting question. I don't think I've ever, in one sense, sort of thought about it, because I think maybe I've just always thought, known the answer to it. But the question is, 75% of the world's CO2 emissions comes from burning fossil fuels. I guess, has anyone, or how do you think about, if those are reduced to zero, what the impact on what the environmental impact would be? I mean, my impression, my thought, I've never maybe explicitly thought about that before, but that's always because it sort of feels like that's because it's a return to the normal and the way that it should be. But I am kind of curious, because I'm curious to see if that's your thought as well, or if you think about something differently that I'm missing.
No, I think my thoughts are in alignment. I don't think I would disagree with that, Jason. And I think we discussed this already in the panel as well.
Yeah, I mean, unless the question is, unless there's a subpart to that question, which is like, are we talking about it? But we still already, we have, if I don't remember, you'll probably know the numbers better than I will, right? But if we started out at 100, pre-industrialization was 150 parts per million, and we're up to 400 now, so we've stopped adding, but we still got the 400. I mean, I guess the other question is, carbon capture. But yeah, I don't know. Question about giving out the contact information verbally, so it will be on the recording. Do either of you have a preferred contact information to use? or I encourage folks, if they want to reach out, don't ask me legal questions, don't send me any confidential information. I say that because I can't provide you any legal advice, and who knows, maybe we're working on the person opposite from the table and we've got duties to them. But if you want to just connect and follow other events, feel free to connect with me on LinkedIn. And if you want to talk generally about this space or venture, feel free to connect on LinkedIn or send me an email at jason.gordon@klgates.com.
I already put my email. I will add my LinkedIn. And to verbalize it, my email is sanjit@ufirstcapital.com. That's SANJIT at U, letter U, FIRST capital.com.
Thank you.
Yeah, and for us, if you're an entrepreneur building something, the best way to connect with us is to go through our website, powerhouse.fund, FUND. And there we'll be able to make sure we capture all the relevant information about what you're building for our database, both not only for our ventures team, but as well as for our innovation consulting team. Also, please feel free to reach out to me on LinkedIn. I put my LinkedIn in the chat, but it's just Gabe Cuadra and Powerhouse.
And I don't think I asked this question before, but it's always a good foundational one. I mean, are there geographies? I mean, are you focused on the US or North America, or open to Europe? What are your sort of geographies that you all will take a look at?
I mean, we tend to be global, but I think most of our investments have been in the US. So that's been the focus area, I would say.
Yeah, on our end, we also take a global perspective. We focus on startups who are incorporated in established markets, but we do have some startups that are operating in emerging markets. So that we do take that global perspective. We want to be very thoughtful. If you are working in an emerging market, what value we can bring to the cap table. So that would be part of the conversation.
I think we answered this question before, which is, well, we touched on this before with the IRA. Are you seeing specific opportunities? I think, Gabe, you mentioned before there was a lot of enthusiasm with respect to hydrogen, but that's kind of been put in abeyance, maybe as some of the uncertainties get worked out. What other sectors are you seeing have been impacted in either a similar manner or a helpful manner?
Excuse me, I'm getting over a cold.
Yeah.
We have seen some acceleration in home electrification, and I think the rebates and tax credits that are coming are going to be important, and folks are starting to position themselves for that. And that's a crucial and not trivially easy part of our transition. It can be very expensive to retrofit a home that was built to have natural gas heating, for example, or natural gas water heating, and do the electrical upgrades needed to change that. And so we're excited about the impact that those incentives could have of making that financially feasible for a wider segment of the population, and excited about startups who are finding innovative ways to deploy those kind of electrified assets in ways that are accessible for consumers. I do think both the incentives themselves and the attention has also spurred adoption of electric vehicles. As much as there's been a narrative around, is demand not where it should be for electric vehicles, we're still going to set a record for the most, electric vehicles sold in the United States this year. The trend line is still moving in the right direction. And while I do think we have some work to do as an ecosystem to depoliticize some aspects around electric vehicles, I do think that the IRA is already moving the needle on that front. So those are just two areas. I think carbon capture has also been accelerated. It's not a place that we're touching directly right now, but I do think that it has also been accelerated by some of the benefits in the law. And we're seeing some movement and folks trying to position themselves to support the transferability of tax credits for renewable energy. So that's, I think, encouraging, should hopefully, open up more capital to that market. But, we're still early innings on what the actual impact will be.
Have either of you, have looked at sort of the carbon accounting space? And I feel like that was, very active And then maybe, I've had prior panelists sort of describe maybe about a year ago that space was very saturated, even as of a year ago. But do you still see opportunities there, whether it's for hedge fund managers or for, other applications, or do you feel like carbon accounting has, that ship has sort of sailed at this point, that there are too many folks with first mover advantage?
I have not seen too much activity in carbon accounting. I mean, it's to me, it is embedded into some of the other subsectors. And also it is embedded into how the startups are driving their metrics. But I haven't seen much in carbon accounting as a standalone sector.
And what's been really tough in my mind around carbon accounting is today there isn't necessarily a value prop in just doing it better than the other tools that are out there. And so I think until we have some regulatory drivers that really make clear what level of rigor you need for your carbon accounting, it's going to be hard to see someone differentiate themselves in terms of coming to market with a better product. I think where we spent more time is thinking about carbon removals in setting. How can you grease the skids on the development of those projects, the improved monitoring verification of those projects, and ultimately the transaction of those projects as a pathway for companies trying to hit their net zero goals.
And sort of pivoting to talk about something which we couldn't really talk about today. I mean, hardware is a whole nother side or aspect to this. If you were an entrepreneur, maybe interested in learning, what opportunities or what funds are playing in that space, kind of where would you look to get educated or to begin to get educated instead of, who's investing and who's interested in what?
On hardware specifically for climate tech or in general?
Yeah. For hardware for climate tech. We've got a question from somebody asking, if you're more capital intensive and not in software, where would you go to, find out their resources?
Yeah, that's a good question. So there are funds that invest in hardware, not just hardware for climate tech, but hardware in general. And they invest in hardware or materials, technologies. Phoenix Venture Capital is one of them that comes to my mind. There is a fund, MIT's fund. I remember visiting their office a few years ago in Boston. I'm forgetting the name of the fund, but if you Google for the MIT affiliated fund, you will find them, and they invest in hardware and materials. Again, I'm not saying specifically for climate tech and energy. Those are two names. Then there are other funds focused on hardware, and I think they would look at several of these deals. There are also, if the hidden name for venture capital for this is called deep tech investors, or also science focused investors. Trying to find a couple of more names. I don't know if I can find them real time, but anyways, if you look for those, I think you'll find a lot of potential investors.
I would encourage folks to use some of the resources on CTVC. I think they've done a really nice job of tracking and listing a wide range of climate tech venture capitalists across different stages and focuses. I also think sometimes we unfairly group all hardware together, and it's important to differentiate a bit of what part of the cycle is your innovation in. Is this kind of a more fundamental research stage where you're trying to get kind of that first lab testing funding, or is this a hardware improvement to something that is largely de-risked and already deployed? And those are just different needs, different times to market, different go-to-market motions, and you need different investors to support that.
And if I could go ahead, Sanjit.
I looked through my email. One name that comes up is Fine Structure Ventures. fine structure. So they invest in, I think, scientific and deep tech companies.
And if I can riff on that and say it out loud, and you guys can criticize me since I'm not a panelist, I'm just the moderator. But as you're looking through CTVC, or you're sort of doing some diligence to sort of qualify and see if an investor is a good fit for your potential technology. I mean, you do your homework. They will often say, often cite who, what portfolio companies they have, so you can get a flavor for the kind of technology that they're interested in. There'll be some background. Their websites will have information in terms of what is a potential portfolio company for them. On the deep tech side, I mean, Sanjit, when I think about that, I think about those sort of, and picking up on what Gabe said, those are sort of longer term, more sort of capital intensive bets, but many times, and as a result of that, the horizon may or may not fit within venture, or may not fit in venture unless and until you've gotten some grants and you've gotten some research sort of out of the way. Versus, if you're taking off the shelf technology basically, and you're going to just kind of rearrange it and so rearrange it, improve it, add some software to it. There's a whole different category, including a lot of hardware companies that are out there, electronics that are already building, either components or building, solar panels, or they've got funds that they're interested in also sort of investing in. So there's a well that you can go down and just try and figure out what your product market fit is. I think you'll be best served that way.
Yeah, absolutely agree. I think sometimes we talk about, are you building a new Lego block, or are you putting the Lego blocks together in a novel way? And I think as an oversimplification for that concept.
Yeah. I might borrow that if that's okay. Unfortunately, I won't be able to give it back, but no, I'll give you credit for it, Gabe. What about, and this hasn't come up quite as much because I feel like folks have kind of gotten more comfortable, especially as we see statements coming out of the UN Climate Summit and the IRA. But I mean, do you still feel like there's a palpable difference between sort of clean tech 1.0 and this new, not new, but revived interest in climate, in energy, and or is the fact that there's maybe been a little bit of a pullback at the beginning, through this year, is that maybe sort of giving anybody some pause, or think that maybe it's kind of like it was in the 2000s?
We are hopeful. I think the focus at the mega trends level should drive more capital and energy into at the venture capital level as well. We are hopeful that we'll see that in 2024. And especially, I think we'll see that happening because VCs will start looking at sectors beyond AI. Because now AI may be entering hype cycle. There's already talk about that.
Sure.
Yeah, I'd say there are three important lessons I think we can take from Clean Tech 1.0 that we're mindful of as we make investments now. I think the first one is being sensitive to regulatory risk and not investing on the hope that regulation will pass in the future. I think that's an important piece of it. I think another important piece is not assuming that any commodity is going to go up in price indefinitely or maintain high levels indefinitely. So that's true both on, what I'd say is the competition in some cases for renewable energies, such as oil. We shouldn't assume that we're going to see $150 oil and that's going to be the only way that you're going to be able to make a business work. On the flip side, I don't think we should expect that lithium is just going to go up into the right in terms of its price. It's a commodity as well. People will respond to the price signals that are out there and find new and effective ways to bring it to market. And so I think any business that's predicated on only an up and to the right movement of any commodity is something that folks should be very wary of, both when you're designing your business or if you're on the investment side.
and this is maybe a little bit of like a practical advice for early stage entrepreneurs, but like and this is actually maybe directed more towards you, Gabe, at least initially, but in sort of for early stage entrepreneurs who may be getting a product together, maybe they've got an alpha or a beta and they're looking to sort of go out and market test and get some feedback on that. What are some ways to obtain that feedback that you're seeing that's sort of being used? And also, I think to kind of maybe tie it more in on the VC side, like what are those indicias of success and product market fit that you all take a look at? I mean, obviously one is sales,
right?
But
no,
yeah.
Absolutely. And I do think it is a place where, software and hardware are a little bit different. So I want to be mindful that I'm speaking mostly based from a software focused investing experience. With software, I think you have the advantage of being able to get a fairly inexpensive, alpha or even maybe an MVP in front of your target customers, and do it early, so that you can get their feedback. And so, that's something that I think is really crucial, is getting that customer feedback early on in the process, integrating it, and building based on that, and getting as much of that as possible. I think we also really like to see, and going back to teams that have lived the pain point themselves. So they're not just, building something and then going out and finding folks to test it on. They've brought folks as part of their design team who have, would be users of their product, or, or they couldn't find a solution, so decided to build it themselves. And so I think that's another way that you can start designing that product market fit at the earliest stages. For us, as investors, if we don't see someone who's lived the pain point, then I think we really start to lean on, okay, what can you show us in terms of contracts? Who are folks? And ideally, someone who's committed to go past a pilot, but has, done the pilot and said, yes, this is something that is so valuable for us that we're willing to sign a year-long contract at a price point that is indicative of what you'll be able to sell into the broader market at. And when you start standing up a couple of those contracts, then it gets a lot more compelling to me as an investor.
I think I would add to what Gabe said. We also look for flavor behind the revenue dollars. And we also look for the use case. Is this a repeating use case from customer to customer? So it's not enough to just get revenue and claim product market fit. You have to be able to have a repeatable use case and be paid enough for that across customers.
I think that's great and very helpful for the audience. I think, there's a question about being in the Bay Area. It's always like a privilege because you get to work with folks from all over the US. But, Bay Area is not, it's certainly not the only place where there's a lot of really exciting and interesting things happening. And in fact, obviously, each of you, said, sort of global and or national in terms of investments. Like where are some other exciting bright spots? Obviously, Gabe, you're in Houston, huge energy, capital reputation. So the question is asking about where to start a multi-city tech incubator, but I want to try and broaden it and make it a little bit more, I think, open to maybe the rest of the audience, which is where else are there great and exciting opportunities in climate and energy?
I think beyond Bay Area, New York, given the policies at a UN level, there is always a lot of talk about climate and energy there. Then outside the US, Switzerland, places like Geneva, Paris, within Asia, Tokyo, Singapore. So I think there are quite a few centers of excellence, if I may say, if I may use that term. The challenge is, do you have enough entrepreneurs going after these problems and building tech startups? That's not equal across all of these areas.
I'll resist the temptation to use the last 4 minutes to talk about how great Houston is, but we'll put in the flag that especially for folks looking to solve the challenges around decarbonizing molecules, I think there isn't a better place to be than Houston and the innovation that's happening here. And that's been helped along by, I think, the location of Greentown Labs' second headquarters here in Houston, as well as kind of the innovation district that's being built around that and supported by our universities, including University of Houston and Rice. Outside of Texas, in my home state bias, though, I'll note that we're always impressed by the level of support that's out there for Canadian startups, especially from
Yeah, I was actually even going to put in a plug for Canada and Nova Scotia and some of the folks that I have I'm sorry for interrupting, Gabe, but no, went there. Yeah,
I appreciate it. You know, we have a couple Canadian startups, and we've talked to several more, and in the amount of grant funding that's available, the amount of government incentives in terms of tax breaks is really notable, and I think they don't get enough credit for what they're doing up there to support entrepreneurship. That's
terrific. Well, I think, at this point we've about run through our time. It's been a real pleasure and a privilege to speak with each of you. I don't know if there's 30 seconds of parting words that you'd like to leave. I know I already gave you one opportunity, but maybe I'll do sort of one other quick soundbite, and then I'll sign us off.
Yeah, I think we are at an inflection point, I feel, for energy and climate tech, especially from the angle of using new technologies, because AI is at an inflection point. You can actually apply that inflection points to some of the mega sectors like climate tech as well. So the opportunity is there. I think we need entrepreneurs to step up and drive more solutions.
And I'll say first, thanks to you, Jason. And then I want to say thank you to all the entrepreneurs in our audience. I have so much just respect and admiration for folks who are willing to take the plunge and chase a dream and an idea and build their own company. And ultimately, that's what's moving the needle in terms of us putting the innovations in place that we need to meet our climate goals. And so, thanks to the entrepreneurs on board, it's a privilege to sit in my seat and get to support you every day in what you're doing.
Well, thank you both, Gabe and Sanjit. It's been an absolute pleasure. I also want to thank the audience. For those folks who are watching live or watching us on a recorded basis, I want to thank Rob Lau at Idea.IPO for helping to organize today's event and my firm for supporting it. And with that in mind, we'll let you get back to building your great companies. Take care and have a good afternoon. Bye-bye.
Thank you very much.